Okay, please turn off all your videos, everybody. I will drop a reminder in the chat before we are ending the loop so that Mansi can get ready to come on. Okay, thanks everyone. I'll go on mute now and start the webinar shortly.
Hello, everyone. I'm thrilled to welcome you to this event today. This is Banking on Ecosystem Thinkathon, presented by Oracle and powered by YourStory. And I'm your host, Mansi Fadnis. To give you a quick overview of what can you expect from the event today, our speaker lineup includes leaders from leading fintech startups, ISVs, influencers, and industry stalwarts such as global influencer and fintech futurist Brett King, Prasad Rai, Vice President, Global Strategic Clients Group, Oracle. Hitesh Sachdev, Head Startup Engagement, Innovation and Investment, ICICI Bank. Mandar Agashe, Founder and Vice Chairman, Sarvatra Technologies, and many more. And now I'm pleased to welcome Mr. Sanjay Chaudhary, Marketing Director from Oracle, to share his thoughts on today's event and kickstart the sessions. Over to you, Sanjay.
Thank you, Mansi. A very warm welcome to all our speakers and audience. Digitization is rapidly reshaping the financial services industry and further redefining competition between firms. The industry is gradually shifting to an open ecosystem model, with several players combining resources to create joint value and mutual benefits. In today's Thinkathon, we will dwell deeper into how banks can overcome the challenges of building and migrating to a new ecosystem while ensuring compliance with cloud security and regulations. We will cover how the industry can accelerate innovation with collaboration and co-development. So let's begin today's Thinkathon by inviting our first speaker, a global best-selling author, fintech futurist, the founder of startup Moven, and world-renowned expert on the future of global banking, Brett King, who will share his thoughts on emerging banking ecosystem and embedded finance. Over to you, Brett.
Thanks, Sanjay. Let me just bring up my slides. If you guys can give me permission to do that. Yep, thank you. And we'll get started. So I wanted to talk to you about what's happening in the fintech space globally and the emerging ecosystem that we see developing. We'll have a chance for some discussion afterwards as well. So stay tuned for that. We'll have some interesting Q&A, I'm sure. In respect to what's happening in the fintech space, obviously, we saw an inflection point during the pandemic where digital went from being something that was an emerging element of society to becoming a required element for much of society, particularly in developed economies, such as China, India, US, Europe, and so forth. The reliance on web-based and mobile commerce-based delivery services and things like this became quite critical during the pandemic. And this resulted a step change in terms of, particularly mobile banking and mobile payments usage, during the pandemic. Now, to be clear, this trend was already in evidence before the pandemic came along, but it sort of tipped it over the edge. And so when we talk about digital first, in respect to banking, mobile payments, and so forth, we're really recognizing the fact that
No, Evo data, they came last time. They didn't
for
come
most.
so last call we said we already had them on
Sorry,
the
we have
last
someone
event.
else
That's why
coming in over
we
the top
decided
here.
not to have them or talk to them.
For most of, for our customers today, digital is their primary channel, and the use of technologies or other channels like the branch or ATM have become certainly secondary. And in fact, this is one thing for bankers, that's still difficult to get their head around, that now the branch is there as a channel to support digital and not the other way around, as a result of the changes we've seen. The emerging ecosystem obviously still includes the incumbent banks. I call them surviving banks in this space because there's clearly consolidation going on in the market. In the United States, we have about half of the banks that were there just in 2008. So there's been quite heavy consolidation. Branch networks in the US by 2030 will reach about 50% of the level that they were at their peak in 2008 also. So we see, this changes as taking place in these markets. But now we see tech giants and fintechs and tech fins also getting into the play and certainly grabbing market share, but becoming also partners with banks and co-opting in this space. And other players such as cloud providers, data providers, and so forth, also, being part of this emerging ecosystem. Why this is critical is to understand this is if you look back in sort of the 90s, the financial services ecosystem was just regulated financial services entities. There wasn't really much participation from technology companies. Fintechs didn't exist, not in the term, the way we use that term today, which is internet-based startups that have emerged. Particularly since mobile, the emergence of the smartphone. But this is what the ecosystem is going to look like in 2025. It is already looking very similar to this right now, but the embedded finance, embedded banking experiences that we'll see built over the rest of this decade really require the participation of all these different players. Banks are no longer able to deliver banking in real time to customers without these other players in the mix. Because frankly, the primary technologies that we use for banking today, banks don't own. They don't own smartphones. They don't own the operating systems that run the smartphones. They don't own smart speaker technology. They won't own smart glasses, in terms of hardware production and device design. So banks are reliant on technology players to enter this increasingly digital market. And this will certainly be the case in respect to the metaverse and other things like that. When I talk about Bank 4.0, just to give some context, I talk about the fourth era of banking. So Bank 1.0 is the traditional banking space. Bank 2.0 is the era of self-service banking, which included the early introduction of self-service capabilities through internet. Bank 3.0 is mobile-based banking and the emergence of specialized fintech startups. And Bank 4 is really embedded, ubiquitous banking, built into the world around us through the technology layer. What's different about this from the traditional way of banking is it's low friction, low latency. Now, we know every industry right now is going through digitization, but from a banking perspective, it's that element of experience design and reduction of friction, particularly associated with KYC, compliance workload and things like that, using technology to reduce that friction for the customer experience. Getting down to the point when we have a frictionless real-time experience built into the world around us. Now, for the traditional banks, particularly in terms of the introduction of mobile, this is how we saw the adaptation. We saw a plastic card representation put in the phone using tokenization. Now, this is a fairly reasonable design approach if you want to keep the existing rails, the existing point of sale system and so forth at the forefront of payments. But there was a clear opportunity with the emergence of the smartphone to rethink the way we thought about bank accounts, the way we think about wallets and payments. But in the West, we were really stuck with the MasterCard, Visa, SWIFT sort of rails and infrastructure because, regulators clearly preferred those incumbent systems because new systems represented risk. But in China, we didn't see a lot of card activity, there. Cards weren't particularly popular. Cash was king in the early, in the 2000s and so forth. But around 2014, we start to see the emergence of these Chinese mobile wallet systems. And they grew extremely rapidly because they didn't have the constraints placed that you would have placed with a sort of MasterCard Visa card scheme, where you required a point of sale, you required a bank to issue a debit card, you had to go into a branch and sign a piece of paper to get that debit card. If you wanted a merchant account, you'd have to do similarly. None of those restrictions existed for the growth of the mobile payments network in China. All you needed was your own smartphone, and as a merchant, you could accept payments. Now, obviously, it started with QR codes, but now we have technologies like facial recognition, voice recognition, fingerprint recognition being used biometrically to improve the security of these mobile payments. And as you're going to see in a moment, all of this coming together, with the network effect that's happened in China, has meant that now the Chinese mobile payments ecosystem is orders of magnitudes larger than any other payments ecosystem on the planet. And, that is partly because, we saw a first principles rethink of mobile payments in China, rather than trying to replicate what the West had done or incorporate the Western systems. And this has been extremely successful in China and is now starting to be exported around the world, with Alipay and Tencent WeChat Pay now in 150 countries around the world. But here's where the rubber hits the road. In 2020, the Chinese mobile payments ecosystem, this is primarily Alipay and Tencent WeChat Pay, but includes now things like the ECMY wallet and so forth. But in 2020, we saw $52 trillion of mobile payments conducted over these Chinese mobile wallets. That means that in actually 2018, the Chinese mobile wallet ecosystem surpassed plastic card payments globally. And in 2020, they're almost double the number of plastic card payments we see around the world, which equate to around $35 trillion of payments. The US has $7 trillion of payments that they do on plastic cards annually, and just $300 billion in 2020 in terms of mobile payments. So China's $52 trillion of mobile payments collectively beats out all of this and is equivalent to about 3 times China's GDP. And this is even before we see integration of ECMY with the Belt and Road Initiative and other things like that, potentially that could even further disrupt the payments landscape. But this is really critical to understand because mobile wallets are now the #1 form of day-to-day discretionary payments. So for banks that are still issuing plastic cards, they're on borrowed time. They're using 50-year-old outdated technology, whereas these mobile wallets offer greater flexibility in the digital-first 21st century economies, as we're going to see. Now, you might be tempted to say, what about fraud? What about cybersecurity? This is one that I get quite frequently. Well, let me give you some stats on that. Alipay has the lowest fraud rates in the industry right now. At Singles Day last year, November the 11th, about $85 billion of sales made on Alibaba in that one day. And all of these transactions generally were going over the Alipay network. A peak of 460,000 transactions per second and just 0.0006 basis points of fraud. Doesn't sound like a lot, right? Well, it's not, because compared with plastic card payments in North America in 2020 that had 11.2 basis points of fraud, that means that plastic cards are 10,000 times riskier to use than a mobile wallet today for day-to-day payments. In fact, even on the transactional capability, Alipay doing 460,000 transactions per second at the peak. Visa has a theoretical peak on their network of 32,000 transactions per second, 1/10 of what Alipay is doing on times like Singles Day and over Chinese New Year. So it's safer, it can handle much larger capacity, and obviously the mobile wallets attached have far greater reach, better security systems, and are smarter in terms of the implementation. So this is really helps us understand the way the battle for payments and bank accounts is going to shape up over the years moving forward. But 2021 was a huge year for fintech. 1 in 5 of all venture capital deals globally were fintech deals. Q4, we had $35 billion of funding in just that single quarter, $37 billion in Q2, the highest single quarter for venture capital investment in fintech on record. And just to put that in context, Q2's numbers were about the same for all the funding in 2020. And so there was a perception by many traditional bankers that when these fintechs had to face a real crisis, that there would be a collapse of these fintechs because they weren't as robust from a risk and compliance perspective. Well, it turns out exactly the opposite was true, that during the pandemic, these fintechs grew sizably, including their market cap, the raises they were able to do, and of course, in the number of active users and customers using those platforms. So unfortunately for incumbents, the pandemic as a crisis didn't help their case. In fact, if anything, sped up the shift of many customers and market share to these new players. The largest fintech in the world is Ant Group. They were previously valued at north of 300 billion, but recent restrictions in China have obviously taken their toll, particularly with the halting of Ant's IPO back in 2019. But still, this puts them in the top 10 banks or financial institutions in the world globally in terms of market capitalization. Now, market cap is a figure we do use for traded entities, obviously. But when we talk about fintech, more and more analysts are starting to use these type of metrics rather than things like return on equity and asset size to measure the performance of players in the sector now. We're going to get into that in a bit later. But Ant's the largest fintech in the world, but the largest challenger bank in the world is actually also based out of China. It's called WeBank, based in Shenzhen. They have 240 million customers. This is just over the space of just 8 years. Their market capitalization is 70 billion today. They're listed on dual listing on the Hong Kong and Shenzhen stock exchanges. But 240 million customers, to put that in perspective, that is 3 times the size of JP Morgan Chase in terms of their US retail customer base. 98% of inbound service requests are handled by artificial intelligence. They can launch a new product within hours based on the technology they have. They are a partner to many banks, particularly in southern China, that use their blockchain-based core system. Sorry, Oracle. But this is a great example of a fintech player that is both competing aggressively in the market and working with incumbent banks as well. In the West, the largest non-Chinese bank in startup terms is Nubank. In June of last year, they raised $750 million preparing for their IPO. At that point, early in 2021, they had just 40 million customers. But by the time they IPO'd in December at a $50 billion price tag for their market cap, they had already grown to 48 million customers. Now, keep in mind, this is just over 7 years. So when you see the performance of Nubank or WeBank in terms of these tens of millions of customers that they've acquired, we are starting to realize this is the differentiation of these digital pure play banks in terms of their ability to grow. No branch network in the world has ever grown anywhere close to this rate in terms of customer growth, and physically that's not possible. So digital acquisition is becoming the main modality of growing financial services brands in the post-pandemic or post-digital world. Their acquisition cost is very low, obviously $5 per customer. If you look at Chase in the US, for example, it's $350 per customer to acquire a new customer in a branch. So that is the cost dynamics that's working for these challengers entering the market and helping them build market share. And in respect to risk, their credit card delinquency is significantly better than the rest of the industry. And that magical metric of primary financial institution, in the case of Nubank, more than half of their customers now count Nubank as their primary bank. Now, why this is significant is, for many, when we talk about fintech, industry players and bankers talk about fintech as a potential threat in the future against incumbents. Payments banks in India, for example, and the potential threat of these disrupting the market. But keep in mind that WeBank is one of the largest banks in China now, certainly in terms of customers. Nubank is the largest bank in the Latin American market based on their market cap. Number 2 is a 98-year-old bank called Itaú, and they have $39 billion market cap today based on their 55 million customers. But they're not growing anywhere near the rate that Nubank is. And Nubank is able to deploy capital far more efficiently for growth than Itaú. This is why the market has valued them as the largest bank in the Latin American market. So a fintech is the largest bank in LATAM. And we're starting to see this happen in other markets as well. Revolut is now in the top 10 banks in the European market. They raised $800 million in July of last year off their 16 million customers. And for players like Monzo and Starling and Revolut and others playing in the UK market, 38% of salaries are direct deposited now into challenger banks. So this helps us understand the market share changes that are already taking place in developed markets like the UK. We have N26 in Germany. It's the second largest bank by market capitalization in Germany today, beating out Commerzbank most recently, and they raised $900 million in October of last year. These are all very big raises and shows that fintech, there's no signs of the fintech sector slowing down. having said that, 2022, there has been a slowdown in funding, but this is not a loss of confidence in the fintech market. This is more as a result of the overall economic conditions, particularly what's happening in Ukraine, the geopolitical situation, and obviously high inflation rates and so forth, and increasing costs. But fintech is still punching well above their weight in terms of growth and capturing market share. Now, we see traditional banks trying to copy these measures. Chase has launched in the UK with their digital-only bank called Chase. They've already invested $750 million in that, but their cost of acquisition is significantly higher than other direct challenger banks in the UK market. So this is not a technology problem. This is a cultural problem, in terms of the way they're operating. But keep in mind, Chase has had a couple of shots at trying to develop digital banks, and their first effort in the United States, which was called Fin, was not successful, and that closed down. Now, if you want to know why a startup or a digital pure play in the US wasn't successful, it wasn't because of regulation, it wasn't because of technology, it wasn't because of costs. Ultimately, this failed because of cultural issues within JP Morgan Chase. If you went to sign up for Fin as an app, and you put in your address like I did in New York, if you lived in a location within 50 miles of a branch, you were told you could not use the Fin app, and you had to use the traditional Chase app because you could open a bank account in a branch. You didn't have to use the app. So this conflict between the incumbent business and the digital pure play business resulted in the complete failure of the digital business because they weren't prepared to commit fully to this sort of digital first approach. Similarly, a similar thing happened with RBS NatWest Bow in the UK. After going through 3 CEOs in just 18 months, Bow was shuttered by NatWest. This was after spending over $150 million US on investing into this startup. Now, keep in mind, Bow was a response to RBS's attempt to acquire Monzo in the early days. This is around 2017, 2018. But RBS was faced a sticker shock because Monzo was valued already at $300 million at that point. And RBS said, we don't need to buy Monzo. We can build our own Monzo for far less money than that. And they did. They were successfully able to build Bow for about $150 million, but it didn't launch because of the cultural issues between the management of the new digital pure play team and the existing management disagreeing in terms of various policies and approaches in terms of the launch of Bow into the market. It didn't even get past beta. And so if you're going to look at the primary issue facing incumbents today, tackling these new digital entrants, obviously right at the top is this digital first culture. If you've still got one foot in the old world of branches and signatures on pieces of paper and things like that, then you're going to have a huge amount of difficulty really competing solidly against these new entrants. Now, we have seen some success with these pure plays, but this has mainly been in terms of launching new initiatives such as Digibank from DBS that has around 5 million customers now. They've spent a respectable 200 plus million on this, but it's been reasonably successful for DBS, and this has allowed them entrance into the Indian market in a way that they couldn't have realistically done for this sort of money in the past without, say, buying an existing branch network or existing brand. So we are starting to see this emerge as a tactic for traditional banks to enter new markets using these digital pure plays. We also see partnerships such as the merger between 86400, a fintech startup in Australia, merging with UBank, which was the digital pure play arm of NAB, or National Australia Bank as they were previously known. Again, a 200 million plus acquisition there for the the 86400 team led by Anthony Thompson and the team from Cuscal. So, these sorts of partnerships between, fintechs and, traditional players are also working, but there's very few examples of this in terms of success. And there's very few examples of traditional banks successfully launching digital banks. Certainly there are, more than 180 challenger banks around the world today. A couple of dozen of them are already unicorns worth more than $1 billion. We just don't see anything like that in terms of numbers from traditional banks launching pure plays successfully. So right now, the success is with the pure play digitals that aren't encumbered by traditional legacy policy, process, or technologies. So this is really key message for the session today is if you want to be digital first, if you want to compete in the digital first economy in financial services in this emerging ecosystem, it starts at the boardroom, it starts at the exco with deep technology expertise and deep digital first commitment. If you like, say, I don't know, HSBC, right, where you have a single technologist on the board and his specialization is cybersecurity, you can't expect to compete with the rest of the world in terms of fintech, challenger bank, and others. You just don't have the DNA in the boardroom in respect to that core digital first culture. So I'm mindful of the time, so let me move through this second part of the presentation, and then we can have a bit of a discussion. So this brings us to the obvious evolution in bank accounts that's happening as a result of the introduction of smartphones and use of smartphones as mobile wallets. We've already seen that mobile wallets now dominate in terms of day-to-day spending, but let me give you a little bit more detail around why that is. So you've got players like GoTo or Gojek in Indonesia now with 380 million customers, 40 million monthly active users on that platform. They acquired a bank in 2019 for the purpose of building out their, wallet and, credit capabilities on that platform. So super apps are now starting to become an excellent vehicle for fintech because they are a platform built for commerce that requires obviously some financial services plugins, whether that's payments, access to buy now, pay later, credit, and things like this. We can see that these super apps such as Waitsin, WeChat, WhatsApp, Gojek and others, Uber, are starting to create these platforms where people are coming together from a financial activity perspective. But the majors in terms of the operating systems are also looking at mobile wallets. So Google Wallet is spending a lot of money on enhancing their capabilities. You can see one of the key features of the wallet now is this predictive cash flow, the ability to dynamically look after payments and things like that. Excuse me. This is a feature you just can't do with a plastic card. So we are starting to see differentiation from dumb plastic to smart wallets around this sort of feature functionality that wraps around your money management. So we talk about financial wellness, we talk about real-time credit access and things like this, behavioral savings tools, things that you just can't do in a traditional bank account. So the world is going to be starting to talk about dumb versus smart bank accounts in respect to the sort of competitive strengths of mobile wallets versus plastic cards that are issued by traditional banks. Now, while banks have tried to close the gap using their banking apps that are connected to debit cards, the difference between using a mobile wallet and touching your phone to pay and having the interactions based around that behavior are very different from swiping or tapping a credit card where you get zero feedback, frankly. Now, this has a huge behavioral impact. So just by using a mobile wallet with a receipting experience that shows how much you're spending, for example, Moven has worked with TD to build this capability. We're working with banks around the world to as a startup to license our core wallet technologies and mobile banking app technologies to banks around the world. But in the case of TD MySpend, they saw dramatic improvements in respect to the satisfaction of customers based on the use of the mobile wallet. Customers who use TD MySpend, their mobile wallet app that gives the real-time receipt capability, they tend to spend 5 to 8% less per month than their contemporaries that just use a debit card. This is just because of real-time notifications and nudges and messaging around their financial behavior. When you see an alert, a spending alert, for example, on dining out or entertainment, where you've spent more than you typically would spend in that category, as soon as that alert is received, we see about half of the households that receive that alert immediately reduce their dining out or entertainment expenses over the next week to 2 weeks. And so this has a very real psychological effect on behavior around money habits and money management. That means that mobile wallets can really help you save money much more effectively than just having a passive savings account. And we're starting to see this type of thinking being built into small business accounts as well, with integrated accounting, tax preparation, other things like that, highly automated. If you think about it, what is a bank statement if not a general ledger of your payments and transactions? What would it take to automate the bookkeeping element for a small to medium enterprise using, technology behind the login? This is the type of development we're seeing. We're seeing money management, cash flow management, predictive cash flow, categorization of expenses and things like this is all coming to the fore with use of machine learning, data science, AI, and so forth. So the real trick is understanding that these smart wallets that we'll interact with will be smart enough for us to ask our smartphone, hey, can I afford to go out for dinner, using open banking and technologies like that, and give you the answer to that question because of the data that is available to these mobile wallets. Obviously, you can't ask your debit card or your credit card that same question. So this is where the differentiation between fintechs and tech-based wallets, such as those from tech giants, is really going to start to produce a significant operational gap in feature functionality from traditional players who are still issuing plastic cards. So I call this the mobile wallet wars for obvious reasons. And this also allows us the ability to create contextual situations. So buy now, pay later is an example where this destroys the use case for a credit card because now you have credit built in to a basic purchase scenario. In this case, say purchasing a Peloton exercise bike, which were very popular in the West during the pandemic. Obviously, they're having some growth problems now, Peloton. But having said that, this was really part of the explosion of buy now, pay later, particularly in the US market with Affirm and Klarna. This contextual credit, we're going to see increasingly players thinking about what is the right time, place, location, what is the trigger, what is the behavioral location trigger that requires you to have access to credit. Rather than thinking about you need a credit card, it's simply now, how do I get you access to credit in the moment when and where you need it? And so those things that we used to think of, a credit card or a travel loan or a car loan, these sort of things, these are now replaced with contextual credit built through these smart wallet ecosystems. So think about it in this way. You go to a grocery store, you fill up your cart, you go to check out at the grocery store, and your card has declined. I'm sure many of you have had this problem. So it might be because your mortgage has come out, maybe your salary hasn't hit the account yet, whatever the case may be. A traditional banker would say, you need a credit card. If you come to the bank, you apply. If you're not too risky, we might give you a credit card and we'll send it to you, 7 or 10 days later. But a technologist doesn't think like that. And that's why we're seeing this embedded finance, strong differentiation. Because a technologist will say, well, hang on, I know where you go grocery shopping. I know you normally spend, I'm just trying to think of I'm trying to do the conversion in my head. I'll leave it with US dollars. We know you normally spend $200 on groceries, and we know today you've only got $150 in your bank account or your wallet. So we're going to offer you the additional cash, maybe $60 or $70 if you need, to top up so you can afford to get your groceries today. We can do that in real time when you walk in the grocery store based on the data we have about you, geolocation trigger, and your previous behavior. And that's the best way to deliver credit in a real-time scenario, not applying for a credit card, whether that's in the branch or in an app. It's still an inefficient way of delivering credit access in the digital world. So if you're in a credit card department, sorry for that bad news. But the next technology, instead of smartphones that we'll be using, is smart glasses. This is Project Aria from Meta or Facebook. This is the smart glasses project they're working on. Now, these smart glasses have obviously cameras and image detection, LiDAR capabilities, so they can recognize objects in the real world, mapping the world around you. They can recognize faces, they can recognize objects like computers and so forth. You could even theoretically ask your smart glasses, do you remember where I left my car keys? And using image recognition, it will know that the car keys were placed on the table, and it would label them and would tell you that's the location of your keys. And when you're in the real world, you go to the coffee shop and your smart glasses is telling your barista the order for the coffee, paying for the coffee remotely, no swipe, no tap required. It's device linked, so no PIN number or chip and PIN, and off-world preferences come into the online world and vice versa as well. So smart glasses are going to be emerging over the next couple of years as the next personal computing platform. And this is further going to give us this capability of some really interesting embedded finance options, like walking into a Tesla dealership and seeing what sort of car you can afford in real time, having a financing offer or assistance with buying the car. Or if you're out looking for a home, as soon as you walk into a listed property, you get a financing message come up on the phone or on your smart glasses that way. Now, this is only possible if you have the right data. If you're a traditional bank selling mortgages today, what you have to do is you have to wait for a customer to come and ask for a mortgage. Or maybe you have brokers that will come and ask for a mortgage. That's the only way you find out the intent of a customer to buy a home. But if you're Google or you're Facebook or you're someone else like this, you probably have this information, the intent to buy a home, in your data set from search engine activity, from browsing activity, and so forth, and you're much better prepared to offer home financing on a contextual basis. So banks just won't be able to compete in the mortgage business unless they have these data partnerships with fintechs and tech players who have the right data. Because waiting for a customer to come and ask for a mortgage is the surest way to guarantee your mortgage business is going to collapse overnight in the digital first world. So this is a big behavioral shift. Now, it's not only wallets are not only, this contextual embedded finance environment, they're also going to be critical for things like the metaverse and crypto. Crypto custody is becoming a massive issue for banks right now. If you don't have crypto custody, look at companies like NYDIG or Coinbase and others as potential partners. Binance is another one that's partnering with banks, but NYDIG just raised $1 billion in December 2021 based purely off their crypto custody capability. We have Paymaya Bank in the Philippines launching crypto custody there in partnership with Coinbase, and there's others, in like Emirates MBD in Dubai with their partnership with Coinbase as well that are doing this. This is the ability to allow your customers to have crypto funds on their balance sheet behind the login within internet banking. So if NYDIG can raise $1 billion just for this capability, there's massive demand for this coming. But the metaverse and Web3 is what happens next. Now, in the metaverse world, of course, in these virtual worlds, we'll be, using currency to buy things. We could buy real estate in the world now. We can buy power-ups for our weapons, or, clothes for our avatar, furniture for our virtual real estate, and things like this. But very soon, people are going to be creating content and creating elements for sale, like we have with digital assets like NFTs today for sale. And this is going to become a thriving next generation commerce platform as well. Now, you can't conduct your business using cash in the metaverse. You can't use a plastic card in the metaverse. You're going to need to use a wallet that is a digital hybrid wallet, bridging the gap between the physical and the real world, the digital world. And you'll be able to buy goods and services in the digital world and have them shipped to your physical locations as well. So you'll be interacting with Gojek and Grab and Uber and Amazon and Alibaba and, organizations like this in the virtual world, maybe in virtual stores, but you also may be interacting in other ways. You may work in the metaverse and earn income in the metaverse as well. So the concept that you would have a virtual plastic card and swipe a virtual point of sale, as was proposed by WorldPay in the metaverse, is sort of ridiculous, really. Digital wallets are not only, improving people's capability to manage money in the real world, they are the only bridge that we'll have for cryptocurrencies, for stable coins, for CBDCs, and of course for interacting and working in the metaverse. So mobile wallet is really a critical piece of infrastructure, as is the core technology that's going to allow you to operate in the cloud, to integrate with these data providers and partners such as fintechs. This is why we now talk about a lot more about tech stack rather than talking about core systems, because your core system, while being important for you as a bank, is no longer necessary for you to be a bank. Many of the fintechs rather don't have a traditional core. They have a very strong middleware layer. They may have a general ledger of some sort for account operation, but all the core customer experience differential that's built tends to be built in the middle and front ends. So your ability to collaborate in this space requires cloud operation. Obviously, Oracle's a big player in that space. We're talking about blockchain integration, Web3 technologies, things like that. All of these are going to require cloud level integration, and not private cloud either. It's going to need to be publicly cloud-based. And what we're seeing emerging is that public cloud offers numerous advantages for building out sort of platform-based ecosystems for banks, and also represent far greater security rather than on-premise system of traditional banks now. The gap is growing in terms of reliability there. So the real message today is you're going to have to work with fintechs and tech players to be a part of this future ecosystem as a bank. And the beauty of working with a fintech player is that they can bend space and time. Why? Well, they're normally smaller organizations with, they don't have legacy technology, they don't have legacy process, they don't have the same compliance and risk view that you do. And so they can deploy capital to produce technology innovations far more rapidly and far cheaper than a traditional player doing that inside their traditional organization structure. So this is the key advantage of working with a fintech. You can deliver the same results in much less time and much less cost than doing it in-house on your own. But only if you let them. And this is where a lot of these partnerships break down. As we see, culture is a key issue for being able to sort of have this digital first mindset. And if you let the procurement department, run your fintech relationship as they're dealing with a software vendor like an Oracle, for example, then this is not an efficient way of working with a fintech, because fintech doesn't know how to interpret an 80-page legal contract with SLAs and so forth. That's not their core skill set. Their core skill set is delivering the technology and customer experience you need. So the banks that are getting really good at doing fintech partnerships have developed specialized departments dedicated to this that works with the business stakeholders, the procurement, legal, compliance and risk teams to hold the hands of the fintechs through these integration and partnership processes. If you still have your procurement department as the primary vehicle for fintech partnerships, that unfortunately spells a recipe for disaster for fintech partnerships on a long-term basis. So here's the key message I want you to take away from today. When we look at the banking sector around the world, already analysts are starting to talk about the banking sector in very different ways. They talk about market capitalization. They talk about user growth. They talk about digital or customer acquisition costs as these key metrics of these new growing, emerging digital first players. And keep in mind, all of the fastest growing financial institutions in the world today are fintechs, not traditional players. So we're no longer hearing industry analysts talk about asset size, return on equity, NPL ratios, and the traditional measures that we would have used for banks in the past. And that's because fintechs tend to be valued more like technology companies in terms of their growth and their profitability and their capabilities rather than those traditional metrics. Now, not all fintechs are profitable, of course, but for companies like Amazon, for 20 years, profitability wasn't a concern for investors because they were taking market share. And the same is true for fintech players right now. There's no pressure on fintech players to be profitable. There is talk about lifetime value of customers, but there's no pressure on fintechs to be profitable today. And that's certainly not affecting investment as we saw during the huge 2021 year of investment. But by 2025, what's going to become clear is that mobile wallets will be the primary modality of day-to-day banking. That will be your bank account. It will be on your phone, and it will be in the cloud. Smartphones will dominate. Branch visits will be exceedingly rare for customers, and as a result, branch networks will continue to shrink, maybe stabilize in the middle of next decade, but at a fraction of the number of branches that we had prior. But I'll leave you with one thought. This digital first era that we're seeing, it's all about scalability, digital scale at digital speed. The fastest growing FIs are all digital, and the biggest banks of 2030 will be digital first. Yes, JP Morgan Chase will be in the top 10, so will ICBC, but we'll have some fintechs up there as well. Probably it'll be Ant Group will be there. We'll see other fintech banks as well having taken market share and growing into this space. We'll see players like TransferWise and others, in their specialist areas, and we'll see crypto players and DeFi players starting to take some market share for alternative portfolios and investments as well. But the message is clear that from a market perspective, market share perspective, we're going to continue to see fintechs and tech players take more and more market share from incumbents. So if you can't beat them, which you can't by playing by the old rules, then you should join them. And I'm happy to have a bit of a discussion about that. Oh, my new book, The Rise of Techno-Socialism, is out now. If you guys want to check it out, I would appreciate that.
Wow, Brett, thank you so much for sharing your in-depth views and your valuable insights with us in your keynote. Thank you so much. And we look forward to hearing more from you today, of course. But for now, I would like to invite our next speaker. I would like to invite Mr. Sanjay Matthew. Sanjay, welcome. Sanjay is a Senior Director of Financial Services Global Industry Strategy, Oracle, and he will be talking about building the future with partnerships. Welcome, Sanjay, and over to you.
Good afternoon, everyone. This is Sanjay Matthew. I'm a Senior Director within our Financial Services Industry Strategy Global Group. I'm delighted to be here today to talk about how Oracle innovates with our ecosystem to deliver the future of financial services innovations. So today I'll be talking to you about who Oracle is, what we do in banking, what is the breadth of our solutions, what does our ecosystem look like, who's our customer base, and then how do we work with the ecosystem and participants like yourself to drive very unique innovation. So I'm looking forward to delivering the session. It's a short session, but I'll connect back with what Brett talked about with the role of and importance of the ecosystem and what are some of the challenges. And then how does Oracle bring it all together in a curated manner to help you drive innovations? Oracle is a leader in financial services. We have, over the last 40 years, served almost 9,000 global customers in all industries. We have about 26 billion transactions executed on our banking platform, originated about 400 million retail loans, 37 million policies. We have about 600 banks globally running our financial services banking stack in about 143 countries, running about 190 plus digital bank transformations. So let me tell you how Oracle delivers financial services solutions. We are one of the only providers which provide a front-to-back banking stack. So when you look at the stack from the bottom up, at the bottom layer is our what we call the hybrid infrastructure cloud, also called OCI, which you will see in my presentation. This infrastructure can be delivered on-prem or on the public cloud. So we provide a variety of hybrid options to be able to deliver it anywhere. The next layer is basically commonly a data platform, which is the Oracle database, which is also called Oracle Autonomous, again, delivered on-prem or directly on the cloud. Moving up is our application layer. So here we have our human capital management, risk and compliance, regulatory reporting, financial performance, all of those applications, which cover a variety of personas from the head of HR to the CRO to the CFO, the head of FP&A. All of those functions are delivered by these applications. Moving up are the line of business applications. This is where you have our retail and corporate banking applications, the core bank, as we call it, as well as our payments processing layer. These applications are on the top, also surrounded by our CX applications. This is where you onboard, originate, we market, as well as service the loan. And surrounded by all of this is basically our data and analytics stack. This allows basically us to deliver unique insights across our entire platform, as well as with our open banking layer, allows third parties to connect and drive unique innovations with the bank. This complete platform allows us to drive the 6 transformations, as we call it: front office transformations, core transformations, workforce transformations, finance modernization, anything around risk and compliance, and maybe just purely platform transformations. Now, what is unique about this entire stack is basically completely built on the cloud. It's built on a microservices architecture, which allows us to basically connect to any process and innovate, right? So this is completely hyperscalable, it's domain-driven, it's an API-first and cloud-native application. So entire banking application is built on this platform. It's pre-built, but at the same time, it's developer-ready, as we call it, allowing you to basically connect the dots, maybe connect with a fintech, connect with your corporate application, and drive unique innovations, which is going to be fundamental in how we build applications with the ecosystem. Now, I'm going to talk to you about basically how we use these assets in a way that you should be thinking about to be banking with Oracle to build the future of financial services. In the next set of slides, I will talk about all the unique assets that we bring to the table to drive innovation in banking. As we uncovered in the sections earlier that Brett talked about, it's imperative for financial services institutions to be collaborating with ISVs and fintechs and then really create new applications. And I will also add a mix to it into co-innovating even with their customers. However, there are challenges. There are challenges with respect to culture, there are challenges with respect to the readiness of that technology, the challenges with integrating these platforms together. Sometimes they tend to be more of innovation shows rather than basically any output. So Oracle has a unique value proposition with respect to bringing the financial institution, the fintechs, as well as our customers, which are your customers, together to create a unique value proposition. And I'll talk about it in the next set of slides. So when it comes to fintech, we have a unique fintech startup program. This allows us to basically bring in very curated innovations. So be it biometrics, be it payment, be it wealth management, We have a host, I think 100 plus fintechs with Oracle running on Oracle infrastructure, as well as connected to our applications. We help and mentor these fintechs, bring them on Oracle Cloud, get them certified. And then very importantly, we bring them into the bank to drive unique innovation. So if you have a project which you want to basically, let's say, add biometric, or you want to have better onboarding, or you want to have better hyper-personalization, maybe a new AI engine, we have our own, but there's also best of breed from these fintechs that we can basically bring in, right? So we invite all fintechs to come in and collaborate with us and drive unique digital transformation opportunities with banks, where we bring the fintech, we bring our own software, and we bring the bank's requirements to drive unique opportunities and unique digital transformations. So here is an example of the marketplace, and you can see what we have curated is a host of fintechs across the board, right? We have fintechs around in which offer solutions in financial wellness, in retail banking, in payments, in wallet technology, in digital marketing, all the retail space. We have a whole bunch of biometric solutions. In the business banking space, we have fintechs which manage account payables and receivable automation, a number of them which do trade finance, as well as risk and compliance. Number of solutions in the open banking space. All of these fintechs, what they do is they connect with I mentioned the microservices API-based architecture. They connect and they are certified. This allows us to rapidly provide these solutions to you and innovate and create new solutions. Now, the second component of this innovation is the Oracle Cloud infrastructure. If you remember the stack that I walked through, this is a game-changing innovation. We also call it Gen 2 Enterprise Cloud. It's been built up, ground up. This is unlike most other clouds which were built for startups. We looked at the requirements for enterprise applications. We run, as I mentioned, thousands of customers on our banking applications, on our financials applications, running mission critical. So when we built the cloud, we built it with the needs of mission critical in mind. And so we built this Gen 2 cloud, and it is unmatched performance. It's built for scale. It's built for performance. And with respect to price to performance as well, it's extremely competitive price. So it's one of our game-changing differentiators. So when we drive these innovations with the fintech and the bank, these solutions are then delivered on our Gen 2 cloud infrastructure. And when we talk about our Gen 2 cloud, the question that comes up the most often is how wide, how distributed it is. We have today about 37 regions as of Jan 2022 that Oracle Cloud infrastructure is available. And a lot of these regions have a direct connect with Azure with our partnership. Now, specifically for the Indian market, we have 2 data centers that we went live with, one in Mumbai, the other in Hyderabad, which allows you to basically keep the data within the country and then get all the benefits of cloud deployment. And to the testimonial of the OCI cloud infrastructure, that's why we keep attracting new and emerging fintechs every day. So here's an example of many fintechs. So here's a card-based solution called Entercard. We have LOLC here, which runs the full stack, built the entire banking stack on Oracle Cloud infrastructure. A payment solution, PaySafe, and then a couple of fintechs directly from the Indian market itself, built completely on the Oracle Cloud infrastructure on OCI. And these, once they are certified, they form part of the marketplace where we can bring these innovations to you. Another unique ingredient in the innovation is the aspect of customers. Ultimately, banks deliver solutions to their corporate and their SME customers and to their retail customers. And Oracle actually has been working in that industry as well, whether it's retail, whether it's telecom, whether it's oil and gas. We have customers in all of these industries that we've been servicing over the last 40 years as well. And so there are about 430K global customers running a variety of applications and infrastructure in different industries. And why do I bring this thing up? Because when you talk about things like embedded finance, which Brett talked about, the aspect of having that ecosystem of customers with their applications is also important. That's when we can bring the bank and then deliver these solutions directly into these customers. So for example, we have 20,000 customers running Oracle ERP. We have 40,000 SMEs globally running NetSuite applications. And this ecosystem of our customers, where those ERP systems, we can actually take the bank's applications and deliver it directly inside these ERP systems, driving new use cases for embedded finance. And I'll talk about that as an example in a second. I've been talking about a lot of different components, and you might be thinking about how does it all come together. So this slide here summarizes our recipe for driving innovation with the ecosystem. So I just talked about corporate and SMEs. So we have close to 50,000 customers, which are recipients of banking applications, right? This is that SME base which run our ERPs. As an example, we have banks such as yourself in this audience. We have 600 banks globally running our banking applications. We have an ecosystem of fintechs, which we talked about. One thing I didn't cover, we also have very large ISVs, which also run on Oracle Cloud, are part of our ecosystem. And then we have SI partners. And then, of course, last but not least, is the Oracle Cloud and the Oracle banking stack, which, if you remember the banking stack, the innovation stack that we talked about, right? That's a full-blown cloud infrastructure. As all of the core banking applications, it's all built on microservices. So when you start looking at the playing field and you look at all these ingredients, you can start delivering very unique innovations. You could take our stack and then extend it to the fintech. You can take our stack and then basically connect it with a corporate and an SME and deliver solutions like embedded finance. And an SI partner, basically, who we have about 180 of those in the market, we can basically work with those RSI partners to uniquely create some unique innovation for you, which is bringing all these different aspects and help you differentiate in the market. Here's an example of that innovation and how we can we bring different parts of Oracle together. This is something that no other hyperscaler out there can deliver, right? So on the right-hand side is our the banking platform. So the banking platform has, let's say it's a corporate banking. There's a variety of different services. These services on the side, so virtual account management, liquidity management, deposit management, lending management, these services are opened and enabled with our microservices API-based architecture. On the left-hand side are the bank's own customers. These customers run on Oracle ERPs, they run on NetSuite, they run on Xero, they could even be running on SAP. Now, what we're showing here is this ability of this bank to unbundle their services and deliver these services directly inside the ERP system. So that is an example of embedded finance in the area of corporate banking. And we can drive unique use cases such as real-time lending, cash account forecasting, for driving for cash management, and driving understanding the needs of liquidity. We can do real-time payments. There's a variety of things that we can basically create. These are different modules of Oracle. However, now these modules get launched directly, fully integrated from the ERP system. So if you're a corporate, they can experience real-time banking directly from their own system of record. This is an example which is well known, which is exactly what we did with HSBC. We actually took the banking app we work with HSBC as an example, took their banking applications, used our real-time APIs, and then connected it directly into NetSuite. So if you open up NetSuite today, you can see HSBC inside. So that's an example of how we innovate with different components of the solution architecture. So here I come to my summary of my presentation, where our ask to you is to join forces with Oracle to drive future innovation, mainly taking in these ideas about engaging with our wide ecosystem that we bring to the table, co-innovate with us with our own products, where you can connect with solutions like embedded finance, where you can actually deliver new revenue streams. You can basically create new channels of tomorrow. And then lastly, innovate with all of these things with our Gen 2 hybrid cloud infrastructure, which brings it all together. So with that, that's my end of the presentation. I'll hand it off back to the moderator for the next set of sessions. Thank you all. It was a pleasure talking to you.
Thank you, Sanjay, for taking out your valuable time for us today and shedding some light on Oracle's initiatives and offerings. Now, moving on, I would like to welcome our next guests, Brett King, FinTech Futurist, Hitesh Sachdev, Head Startup Engagement, Innovation and Investments, ICICI Bank, and Prasad Rai, Vice President, Global Strategic Clients Group, Oracle, who will be discussing how the future of banking is collaborative. Over to you, Prasad.
Thank you, Mansi, and a warm welcome to the audience for the fireside chat with Brett King and Hitesh Sachdeva. Before we launch into that, I just wanted to share a couple of things with you, which is there is a shift in the banking consumer demographics and their social and behavioral difference, and that will drive demand for new business models. Open banking unlocks new monetization opportunities by enabling banks to extend their distribution to third parties and create innovative banking and non-banking products. These new capabilities require, like Brett said earlier, a digital-first mindset and a cloud-based platform with open APIs that can integrate and comply with the rapidly growing industry ecosystem. In fact, banks are extending their core offerings through adjacent value proposition, accessing new markets via alternative distribution channels, and launching entirely new ventures. So strategic partners are now the norm, where financial institutions share banking data to address consideration and capture opportunities. In fact, as per an industry analyst, across a range of financial services, including payment, lending, and insurance, embedded finance is expected to generate $230 billion of revenue by 2025, right? And that is a tenfold increase from the 22.5 billion in 2020. In this fireside chat, we'll just cover how things are evolving in the banking ecosystem, particularly for a traditional bank. And in fact, Brett, towards the later part of your session, actually towards the end, you talked about join them, right? So it would be great to hear from you how banking partnerships, traditional banking partnerships and new ecosystems are going to evolve in the future. In fact, one of the Q&As, one of the questions on the chat was on that area. Over to you, Brett.
Thank you. So I think obviously, for Moven, I can talk from practical experience. We were the world's first mobile challenger bank, purely mobile. That is, simple, and Fedor started similar times to us, but they were more focused on web at the time. We had sign up in the app for a debit card, and by 2014 we had 250,000 customers. But it was very difficult to raise money at the time. So we started licensing our technology to banks, TD Bank in Canada, Westpac in Australia, Sberbank in Russia, BCA in Indonesia, et cetera, et cetera. But over time, it became clear that there was better margin for us as a fintech working with banks. But the issue is we went from a model where we were trying to grow in the consumer market to now, as Oracle, I'm sure, understands the typical long sales cycle that you have working with banks. Interestingly, for us now as a bank, BaaS, banking as a service provider, we are providing banking front ends and mobile technology for fintechs now. So they're licensing technology, and we're working with those fintechs and their banking partners. So it's certainly, I would say, for fintechs, the immediate advantage that you have working with banks is you provide clear differentiation for them in terms of CX and UX and core capabilities like data science and AI. You can deliver that obviously very cost effective for those bank partners, so they get good ROI, and you get strong revenue. You get clear revenue for delivery, particularly if you have a subscription model or licensing model. Obviously, the more success that those that your software or stack provides to banks, the better off it's going to be. But having worked as a fintech with banks, I can tell you that banks still have a very steep learning curve in how to engage with fintechs. And right now, we have had a number of relationships with banks that just haven't worked because of those cultural issues. It's never a technology problem. It's never that our technology is risky and the bank doesn't want to use it or anything like that. It'll be something like, banks, having a fundamental misunderstanding of how our technology needs to be integrated, or them not able to build to us from a technology perspective, or purely just the legal and procurement teams getting in the way and frustrating the business because they're trying to de-risk to the situation, and ultimately that de-risking would put us out of business if we were stuck with the policies, and the compliance view of the bank, rather than operating as a fintech.
Very interesting, Brett. I think over the years with Moven, there's been a lot of learning, and I think it will probably progress and get better as we go ahead. Just to flip the coin, on the other side of the coin, we have Hitesh from ICICI Bank. Hitesh, of course, is at the leading edge where a traditional bank meets the new disruptive technology and the fintechs, right? So from your perspective, right, what are some of the challenges, Hitesh, banks face, traditional banks face, while working with ecosystem partners like fintechs and ISVs?
I think good evening, everyone, and thanks, Prasad, for inviting me on this esteemed panel. So at ICICI Bank, we have always believed in the technology as the force multiplier for all our businesses. And we are a digital first bank with innovation at core of our strategy. So I would not say ICICI Bank is a pure play traditional bank, but we realize that innovation has two broad approaches, right? One is you keep building a lot of things inside the bank, but it has its own limitations, right? And the other way is to capture the innovation which is happening at a very fast pace in the outside startup ecosystem. So to tap the innovation happening in the outside ecosystem and marry it inside the bank, we created this platform to partner and collaborate with startups to create innovative products which are in alignment with our digital roadmap. The objective of this platform was to create rapid prototyping, experimentation, more risk taking, and do more innovation at the edges, and then make it core of the bank, right? And this is not the innovation for the sake of innovation, right? It has clearly defined objectives that it has to result either in increase in business, bringing new business opportunities, or it should help us to reduce cost by bringing in more efficiencies, using technology, or it can also help us in risk mitigation. So these were the objectives with which we embarked upon this journey. While we started working with startups, the few challenges which we faced, one of them was that most of the startups use a lot of open source platforms, and at times you don't have enough support for those open source platforms, and that's a real challenge. The other challenge you face is that sometimes if startups are not able to raise enough of funding, you actually start working with them, deploy their products and services, and if they fail to raise enough funding, it might result into their closure, and then it creates a problem for you because you have invested time, efforts, and energy creating products and services with them. Or at times it also happens that some of the startups are also getting acquired. Like we built one of the front-end chatbot platform for resolving our customer queries, and one fine day the startup got acquired by a US a company, right? And they decided not to pursue Indian operations, right? I mean, so having worked with them, creating a platform, deploying it, customer facing platform, right? And all of a sudden you find that there is no support available, right? So these are the practical situations which you will come across. The other problem you face is about the data governance and data security, where again we have seen a lot of data breaches happening. So a lot of governance needs to build about how one should share the data, how one should keep the overall data security in place. So having said and talked about all these challenges, I would say that working with startup has been an exciting journey. We have immensely benefited, right? To give you a couple of examples, our video KYC platform, which is handling all the video KYC for all our products, it has been designed and developed in partnership with a startup. Our customer onboarding platform, again, has been designed and deployed by a startup. Similarly, we are using a lot of satellite data for a lot of our business intelligent decisions or collections, again, a startup. So we have more than 30 plus partnerships with startups, which are scaled partnerships, and and it is a win-win situation for both startups and us. And what we have done is, I think what Brett mentioned is that you need to have a different team, right, which can understand what startups need and how do you navigate startups. Otherwise they will get lost in such a big organization, right? I mean, so that's what we have done, and the team exactly talks the language of a startup. We understand, we also run specific programs like accelerator programs, incubation programs, demo days, hackathons, to create more and more engagement with the startup community. So I think if I in a nutshell, if I conclude, though there are challenges working with startups, but I think there are ways to overcome those challenges. And if you put right rails and right set of team, I think it will immensely benefit in terms of bringing culture change, and help you be at the cutting edge in terms of technological innovations.
Absolutely. In fact, I think ICICI Bank, led by you, has walked into this with their eyes open, learned along the way, had many wins on this collaboration with the fintechs and the startup ecosystem. Very, very glad to hear about that. Brett, picking up on a couple of the last sentences that Hitesh talked about, plus you talked about FinBank, you talked about both culture, maybe even structure. How do financial services player start looking at embracing a new kind of culture, maybe even a structure, to start being fuel innovation and really start becoming very modern and serve the customer needs?
You know what I'd love to see from an Indian bank like ICICI is an announcement that the new CEO that's being appointed started with the bank as a coder.
Okay.
Right? That'd be a great example of that cultural shift. I'm not picking on ICICI specifically, Hitesh, but you know what I mean. So if you look at these tech fins like Ant, and WeBank and so forth, that are extraordinarily successful. Every one of the board is a technologist, right? Every one of the exco is a technologist. So if you look at Ant's management structure that allows them to be digitally focused, it has this deep technical expertise. You're not going to get that in the same way from a bank with lots of bankers who've got 30 years of branch experience, running the business. So infusing technology, people into the org chart as quickly as possible is really critical. Also, dropping the speedboat in the water. If you want to do something that is pure play and it's difficult to break the culture, then create a new organization on the side, but let it have its independence, both from a platform perspective and a management perspective. Finally, I think if you look at some of the lessons we learn from seeing other players, part of it really comes down to the leadership of the CEO and the voice the CEO has in response to digital transformation. So one example I use in Bank 4.0, I'm based here in Bangkok right now, is Siam Commercial Bank, the CEO of Siam Commercial. So a few years ago, he basically called in all hands, all the staff, and said, our mission is to become a digital first bank, a technology first bank. And that's going to mean a lot of changes. We're going to de-emphasize the branch. We're going to try to create new products and new experiences. It means we're going to have to retrain people and so forth. If you're concerned, but if you're excited about this vision, but you're concerned about your skill set, don't worry. We will give you the skills. We'll train you as a data scientist or a machine learning expert. We'll give you the skills you need to be relevant to the business. But if you fear these changes, if you're concerned about these changes, we will help you find a job outside of the bank. Now, that's a pretty aggressive approach. But if you look at the banks that are becoming digital first, a lot of it comes down to leadership. Look at Jamie Dimon, with JPMC. Look at the team at BBVA. Piyush Gupta at DBS. If you look at the banks that are really adopting, sort of this digital first approach, it is about this strong leadership.
Absolutely. And in fact, having worked with ICICI Bank for many years, I know that they are actually in the leading edge from the leadership level, and they're really looking at how they can aggressively go on that technology and embarkation journey. Moving back to you, Hitesh,
just one point to Prasad, to extend, what Brett said, right? So we have Brett something called, while you are expected to be physically fit for the job, we also expect people to be digitally fit. And we have, a campaign called DigiFit, right? Under which, this is all about bringing that culture change, retraining people, reskilling. I think that DigiFit is one of our core pillars in terms of, bringing that transformation and reskilling and retraining, our people. Sorry, Prasad, you can continue.
I think very relevant point. Very relevant point. I mean, it just shows how ICICI is. Can't stop from taking the plug, but CIMB, Siam Commercial Bank, runs a lot of their systems on Oracle, Frank, in Thailand. But just coming back to you, Hitesh, there are trends like ONDC, Open Network Digital Commerce, right? Account aggregation. How is that? How do you see that impacting the fintech ecosystem in the country? And in fact, there was one question about that because some of these things are being driven by the government, right? Like ONDC. How is it going to have an impact on the digital, the fintech ecosystem?
Let me kind of, set the context in terms of why ONDC and, and then probably you will be, audience would be able to better appreciate, what is the need for an ONDC, right? I mean, so, if you, as a consumer or as a merchant, right? For example, if I want to book a cab, there are only two large digital players available for me to book a cab, right? I mean, if I want to order a food, there are again two large, digital players available for me to order a food. If I want to buy merchandise, again, there are only two large players which are available for me to kind of, order, my merchandise, right? I mean, so how do we bring, India per se is a very large kind of, country. And when it comes to the e-com, it's still at, it's very, I would say, we are not kind of offline, it still rules the, market. How do you promote more and more online commerce? How do you bring more and more MSMEs, traders, help them, set up online visibility and democratize it, right? Not being governed by or dictated by, few of the digital players. How do we democratize it? So that's where the concept of ONDC and discussions about ONDC came up and it got established. The role of ONDC is to run a network, independent, unbiased, neutral network, which will be more of a tech layer. Like, if you take case of an NPCI, what NPCI has done by launching UPI, right? Similarly, ONDC will run this railroads and network for all the stakeholders in, in the online commerce or e-commerce to participate and run their business using ONDC network. The, and then also to bring down the cost, for them to, go online, get, visibility. So that's the overall, concept and thought process. While, having said this, there are a lot of challenges, right? I mean, to create a marketplace, to make it, work. There are a lot of other factors which, apart from technology, which needs to come into play. But, we feel that this will evolve as we move forward, and more. And then, if you see the kind of shareholders of ONDC as well, it's a very wide range of, stakeholders which have come together. And the idea is to make it more and more collaborative, open, architecture kind of a framework where more and more people participate. So the impact ONDC will create is that it will create more and more inclusion. It will increase the e-commerce pie. And what it means for, fintechs or banks or NBFCs is there will be a lot of data availability. So traditionally, the lending is done on the balance sheet, profit and loss account, right? How do you move from those traditional risk models to more cash flow based, more real time information based, lending models, right? So those will this will actually, it will act as a catalyst to, drive those lending models into practice more and more. So I think large part for ONDC, to come into play would be increasing the e-commerce pie, bringing more and more inclusion, and making online visibility of the small merchants, traders, and thereby also helping them getting access to more and more, financial products. On account aggregation, right? Account aggregation is more of a pipe, which will kind of be a common across all the
It's an
banks,
enabler,
through
yeah.
which information will flow, with the consent of the customer, flawlessly, right? I mean, nanoseconds, in microseconds, the data will be shared and exchanged. So this will, in a way, democratize, the information, which is arbitrage of, having information, right? I mean, and the cost of sharing the information will come down. The customers, ability to avail more and more financial products with a lower turnaround time would increase, right? So that's what, obviously there's a lot of work which needs to be done, but a lot of things have progressed. And we feel that having this kind of a constant architecture, the initial participants are banks, but going forward, you will see more and more participants like e-com players, GSTN network, maybe, income tax data, maybe SEBI data, insurance data. If all of those gets plugged in to a framework, and, if we're able to share the data on a click of a button, only if only, banks will need to invest their, efforts and energy into building up analytics, on consuming this data, and then, giving right sort of products to those customers. So my sense is that this will be a very big revolution, in the next few years, in terms of, again, making more and more customers, avail the financial products at a lower cost.
Very interesting space. I think all of us have to just keep an eye and see how it evolves and how exactly.
Prasad, just make one comment to follow up on what Hitesh said. I don't know if you noticed, but Apple acquired a company called Credit Kudos recently for 150 million in the UK. This is an alternative credit scoring business. So you can see the big wallet providers like Apple thinking about acting as a gatekeeper for credit access and thinking about alternative credit models.
Oh, that's perfectly, I think, Brett, we've been toggling with, alternate data for last couple of years. And, obviously, we realized that some of the data points which we thought earlier, would be useful, but with, a lot of experimentation and, modeling, we realized that, some of them were actually not useful. And then over a period of time, we've been able to figure out what are the important, data sets which can be built into your risk models, and you can actually done away with a lot of this traditional documents like balance sheets and other sets of data which you keep asking customer again and again. So we also believe that the alternate data models will keep improving, and it will help banks to do more and more lending basis this alternate data, and not only lending, maybe offering the right set of products, giving the right set of offers to the customers, creating personas,
Savings,
understanding
improved
your
savings
customers
behavior.
better.
Yeah.
Customer behavior, that's right.
Yeah, when I can tell you just a little story on that, Hitesh. Moven, when we have this thing called impulse savings that we developed when we were a challenger bank, and impulse savings was a message that we would send to your phone to encourage you to put a little bit of money in your savings account. We were able to get half of our customer base immediately to sign up for savings and put money in their savings account without any advertising, just by using nudges. We got so good at it that we could tell you the day of the week and the best time of the day to prompt someone to save, to get them to put money in their savings account. And it was like 1,600% more effective than offering a high interest rate in terms of getting people to save. So, yeah.
No, I agree. I think, Brett, nudges have done wonderful work for us as well. So I think we've been effectively using nudges in our collection business, and it has improved our collection efficiencies to a greater extent. And I believe that nudges could be, if you develop right mechanism in terms of delivering those nudges, I think it can work wonders.
This is turning out to be a chat, which is always good, right? I think we're running a bit out of time, but just one more question to you, Hitesh, since we have you, and you work with, you work in a bank, you work with technology companies, startups, etc. With all of this increasingly open and collaborative ecosystem coming into place, what is the expectation you have from technology partners like Oracle? Right? We've been your partners for what, 2 decades, right? What's the expectation you have in this new world? Very keen to hear you.
Yeah, I think one definitely is agility in terms of agility and responsiveness, right? I think the way banking is changing and it's becoming so dynamic that we need partners who would be more agile, more responsive, and I would say we would look out for people who are real partners, right? Not more people who will be like vendors, right? I mean, partners, when we say, probably they will be able to help us, guide us, in terms of building our future strategies, in terms of how do we remain ahead of the competition, how do we remain ahead of the curve. And yeah, I think that's it. I think that's what we expect. And but I must say that with Oracle we've been great partners, and I think we have done a couple of design thinking workshops. I mean, it was the idea was from Oracle team, right? I mean, so was very happy to see that Oracle working hand in hand with their partners, and helping them on the path of their innovation journey by bringing in this kind of initiatives. So yeah, I think these are some of the expectations, and I think as the needs and the changes in the customer demands are dynamic, we also have to be dynamic and work together to fulfill those. Ultimately, we will have to work towards offering the best set of services and products to the customers. So those are some of the expectations.
Absolutely. A lovely conversation. Thank you very much, Brett and Hitesh. I wish we could have continued it for a bit longer, but I think we've already overshot a bit. But thank you once again for your time.
Thank you.
Thank you.
I've just put my contact details if anyone wants to reach out with some questions offline.
Yeah, I'll also do that. Thanks, Brett. Bye.
Thank you.
Thank you. That was quite an insightful session, Prasad. And now next up, we have yet another stellar panel where our esteemed guests will discuss about leveraging partnerships in the era of digital transformation. And to delve deeper into this topic, we have with us Sunay Mrutyunjay, Senior Director, Product Strategy at Oracle Financial Services Software Limited, Mandara Gashe, Founder and Vice Chairman at Sarvatra Technologies Private Limited, Deepak Dubey, Founder and CEO at Datanomers, and Jaideep Singh Ghai, VP Sales at IBS Fintech India Private Limited. Welcome, everyone.
Hello.
Welcome. It's a pleasure to host you today.
Same.
Likewise, Mansi.
Yeah, thank you, Mansi. Thank you, panelists. Thank you, Oracle and YourStory.
Thank you. So now, without taking much time, I have been meaning to ask you all this question that this is an era of digital transformation, and we have seen a collaborative approach between banks and startups. Why do you think leveraging partnerships is the key to growth in this era? Sunay, I would like to hear from you first.
Yeah, sure, Mansi. I think that's a great question and kind of goes with the theme of today's, the whole event, right? So maybe I'll start with the question around partnership. And at Oracle, we have always been believing that it's always an ecosystem play across industries, more so in banking, where we see a lot of innovation happening at hyperscale in the last few years. So at Oracle, what we have is, of course, a robust partner program. We have a great ISV program, and combined with that, the most recent, the FS-focused fintech startup program, which is focusing on fintechs and how we can bring them, let's say, up to speed in terms of what the industry needs, and how can we support them and curate them over a period of time. On the other hand, we are, of course, known for our enterprise-grade solutions across industries. Our presence in over 600 banks is a testimony to that, right? And so with this, what we see is that on one side, you have the fintechs, which are nimble. They bring a lot of innovation. They come with the greatest and the latest in terms of technology solutions. And the banks have the client base. I mean, they have the client base, they have the brand, they have the reputation, etc. Right? But they probably lack in terms of pace of change, etc. And that's where we see combining these two, right? I mean, what we really do is we kind of connect the dots. Where we see a suitable fintech and maybe a problem statement which a bank has stated, and we are kind of providing the required technology to both these, I would say, sides of the coin, right? So we are uniquely placed in terms of connecting these and making sure that we bring them together into common forums via hackathons, maybe forums like these where we bring on board, some of these fintechs, talk about specific problem statements, etc. So that's where we see these collaboration or the whole, I would say, synchronization between fintechs and banks coming together, right? And from an innovation perspective, Oracle has again always been a very innovative company. We invest a lot of our R&D dollars back into research and development. And where we see the innovation when it comes to this ecosystem play is where we bring in a common technology platform like the OCI, Oracle Cloud for the industry, right? And you have the fintechs and you have banks running their applications on the same platform to give a completely seamless experience to the end customer. So that's where we believe we're coming together on a common platform like OCI is going to benefit everybody and will be able to deliver superior value to the end customers.
Right. Thank you for sharing that, Sunay. Jaideep, I would also like to hear from you your thoughts on why leveraging partnerships is the key to growth.
Sure. So like fintech, basically fintech wants to build an open ecosystem. So what fintech can help, they can help in scalability, ease of transaction and automation. I'll take a live example. So if you look at RTGS and NEFT, they started in year 2004-5. Nothing has changed. Still the traditional methods are same, whether ICICI Bank or any big banks you talk about. So only the clock time has changed. So when we talk about the retail clients, like the ease of doing transaction is on the fingerprint. So all these are fintechs, which are collaborating this, which are aggregators, which are making the partnerships. So scalability is there. But if you look at the corporate space, still the large corporates dealing with multiple banks, and still they are into a traditional way where we fit in. So we fit into a space where our systems help with the API integration with the banks as well as the ERP. Oracle is like our partner in this. So like we fill up the space, and definitely we are a bank agnostic company in terms of where a corporate can choose on a single software and do a multiple transactions across the banks. So in terms of scalability, yes, you need not to log into individual banks, as Brett mentioned. Like he said, banks has a limitation in automation. Each bank can achieve a height in terms of automation, but what about the customer? So what about they have to still log into those 10 IDs, those 10, 15 banks? So I think where the fintech plays a very important role, and definitely Oracle with the security provider in terms of data security. So I think these all questions are very well served, as the audience are aware. Yeah.
Right. Thank you, Jaideep. Deepak, your thoughts on this?
Yeah, I think Jaideep and I have explained it well. I've had my 2 cents. It all starts with a business challenge that a bank has, right? So for instance, there is a strong desire to grow. Acquiring customers is expensive. New customers. Can we sell increasingly with newer products to our existing base? 3x to 5x cheaper. Research has shown us that. How do we do that? Well, that means you must delight the customers, because otherwise these premium customers are not going to do more business. So that in turn means that their issues, if there are any festering issues during their life cycle, must have been resolved expeditiously so that they think that the bank is prompt, cares about them. Now the big question, how can cloud and tech team up to deliver this at scale? It's very difficult. You've got thousands of customers who's suffering from what issue and how upset they are, and how does it cause them to perceive the service? How do you do that? You can't hire enough people in the world to do that. Okay, so you bring in tech, you implement it, but whoa, it needs to scale. So we need to have it presence in the cloud where it elastically scales to accommodate the load. And all of a sudden, things that seemed impossible with brick and mortar call centers have now become a possibility, spurring back on the growth. So very real ways in which you can foster tech to help.
Right. Thank you, Deepak. I will now move on to Mandar. Mandar, what about your views? We would love to hear them.
So when Sarvatra looked at Indian market almost 10, 12 years ago, almost 90% of the banks in India didn't have any payment platform. So all of them had core banking of certain sort, but nobody had a payment platform. Nobody issued a debit card. Out of the 2,000 odd banks, only probably 15 banks issued debit cards. And the only way for us to reach to the smallest banks across a large geography like India was to bring them on cloud, because otherwise it was impossible to implement it at such a geographically vast location. Right. So cloud played a very important role, and the collaboration between players like NPCI and banks and Sarvatra, we could realize that it was all about collaboration, and cloud jointly made possible that in the shortest time we could bring so many of the rural customers who had absolutely no clue about digital platform to come onto most modern platform of the world like UPI.
Right. Now, Mandar, I would like to ask you this. Sarvatra is redefining the digital payment landscape in India. Could you shed some more light on how Sarvatra is doing that?
So Sarvatra now today has almost 54% of the banks in India have a digital platform hosted on Sarvatra SaaS platform, which is initially a private cloud, but now very fast moving to OCI. And the key challenge was to ensure that most of these small banks, like very small banks who have no IT people, who have no relevant knowledge of how to do settlements, to just like the plug and play, come on to the latest digital platform. And we enabled that. And today, more than 100 banks in India use our UPI platform. And almost 15% of all digital transactions in India go through Sarvatra platform. And from a smallest rural bank in almost every state in India to the largest bank, ICICI Bank, they use Sarvatra platform.
Wow, that's wonderful. Thank you for sharing that, Mandar. Now I'm going to move on to the two emerging technologies, which is AI and ML. And my question is to you, Deepak. How emerging technologies like AI, ML are helping organizations build personalized products and services?
Brilliant question. One of my pet peeves. So, when we talk about personalized or customized for a customer, so it's like a bank offers financial products tailored to Mansi. Mansi runs a small business, which means business banking services, which means Mansi is in real estate, so CRE, commercial real estate services, business credit facilities, delivered like bread pudding in a frictionless way on your mobile, anytime, anywhere, and in near real time, right? So that it's low latency. It's typically done using AI/ML today by something called a recommender system, item user or hybrid. Those of us who've been in Amazon have seen this in action, right? You buy something and those who bought this also bought this. So that might be relevant to you and therefore make it easier for purchasing. But now just take this to the next level where there is hyper-personalization, right? Brett defined it well, contextualize credit.
Right.
When you need it, where you need it, how much you need it. Several examples. Today you go to a website for your bank. Everyone sees the same website. Why? Once he wants to do this, this, and this, should be customized so that she can easily navigate. Jaideep wants to do that, that, and that. So it should be customized for Jaideep as well. Account activities are used, should be used, right? So for instance, today it says, oh, Sunay has this facility on the bank, this financial product on the bank. So others who've used this also use that. So let's recommend this. Chance of spam. Why? Because his activity on those products may not all be consistent. He may use this and this. Those are just in the passing. So don't send me products that correspond to those, but focus on these. And those are the kinds of things that hyper-personalization requires. The trouble is that from a technology perspective, you really need advanced, transparent machine learning with ability to profile several moments, order moments, not just the first, which people typically do, but second and third as well. And do this all within the ambit of regulatory compliance and GDPR, so that privacy is not violated. You only do it for Mandar if he has given us the permission to use that, offer him personalized relevant services. That's
right.
the challenge that AI/ML, if done right, can address.
Right. Deepak, thank you so much for explaining that so beautifully with examples. Now I'll move on to Jaideep. Jaideep, I would like to ask you this. While the industry is growing and we are talking about emerging technologies, how are you working with the ecosystem to bring innovation in the FS industry?
Okay. See, if you look at all the large corporates, since we talk about the industry, retail space, we know a lot of digitization is happening. We all use our mobile apps and do a lot of payments and all these things on apps, and use latest fintech partners with all these with the banks. But when you come to the industry specific, you see their products, like they use best of the AI, like ML, in terms of what are the best of the class products. But when they come about in terms of corporate finance activity, where there is a bridge between ERP and the bank, and whatever the corporate finance activity, whether they do trade finance or open, like in terms of forex hedging or investments, these are all managed in Excel altogether. You name any big corporate, so 90% or 95% of their activities are still on the Excel and people dependent. And this pandemic, like I remember going to the corporate 5 years back, I tell them, you need the software. They said, we have Excel to work on. But after this pandemic, I think things have changed a lot. Like corporates are understanding the needs. So what we do, we give a system to a corporate, which is a bank agnostic. So it is live connected with all the banks. Like your LC can be opened on a seamless through API. The communication can come through API, and it is auto-populated. And seamless, it's connected to all the ERPs, and Oracle definitely were preferred partners. And so I'm saying this is how the landscape is changing. So like corporates are least invested in their corporate finance activity. I think this is the space. I will say it is not a challenge. It's an opportunity that lies ahead for us as well as the corporates to digitize. And we are seeing a very, very positive response across the industry.
Right. Wonderful. So now, while we are on the topic of innovation, Sunay, I know that at the outset of this conversation, you did mention and touch upon Oracle's offerings. However, could you shed some more light on how Oracle is powering innovation in the financial services industry through partnering?
Yeah. So thanks, Mansi. So like I kind of covered in the previous question, which was directed at me, I think we believe that the whole ecosystem is coming together, and where Oracle plays the role is kind of connecting the dots, right? So the fintechs are there and the banks are there. Then we also have our ERP systems and our industry solutions, which are, let's say, for retail, for construction, or for healthcare, etc. So we are kind of seeing all these, let's say, the market shifts which are happening in each of these pockets. And the common theme being that we, being the technology provider, we have been able to keep pace, be it, let's say, with the industry, let's say the corporates, what Jaideep mentioned in his previous this thing, what they are looking for. And he rightly pointed out the ERP to bank connectivity, etc. Those are areas where we are innovating a lot. Sanjay Matthew also covered what is called embedded finance, which we believe is going to make a huge difference, particularly in the SME and the medium to small enterprises space, where their, let's say, the way they today deal with the banks is going to change completely. Banks will be able to respond to their needs in a much better way as well, in a more timely fashion, in a more contextual fashion. So what we saw as innovations happening in the retail banking space is now rapidly also being adopted or moving to the corporate banking space or the small to medium enterprises space. And their needs are going to be addressed with all these innovations, which we have learned over the past in various across various industries, right? I mean, in my view, retail and the telecom industry are kind of, I would say, they lead the way when it comes to technology and innovations. And banking industry as such, or the financial services as such, is kind of maybe one step behind it, but very soon catching up. And all the learnings from those industries, Oracle is trying to bring together in its solutions, in its cloud infrastructure, in all of the solutions and products that it offers to its customers. So that's the way I see Oracle kind of playing a role where innovation is being pushed across to the consumers or to our own customers, so that they can deliver value to their end customers.
Right. Thank you, Sunay. Now, while the industry is migrating to a new banking ecosystem, I think two things that are on everybody's mind is ensuring compliance with cloud security and regulation. Sunay, my next question is also to you. How is Oracle supporting the industry in building and migrating to this new banking ecosystem while ensuring compliance with cloud security and regulations?
Yeah, so the way I see it, I think very often we see regulation as something which is hindering, which is stopping innovation. But I have a slightly different take on it, right? And in many cases, we have also seen that regulation can be a positive thing. Like, for example, if you take the whole payments innovation or innovation in payments, which has happened in India over the, let's say, past 5-7 years, it's all driven by regulation, where there's a shift away from cash, where there's I would say, technology also has responded well in terms of providing the required payment platform to kind of digitize the whole thing, right? So regulation is not always bad. That's my first point that I would like to make. But having said that, I think regulation is also something which everybody, right? I mean, any FS, financial services player or healthcare or whichever industry, they have to comply with. I mean, it's not a choice. It's not a question of choice. They really have to comply with all of that. So given that, I think what my take on this will be that there are partners out there, I would say, who are known to provide these regulations out of box, or at least provide it in such a way that it's readily consumable by banks or financial services companies. So if you take Oracle, for example, I think for the past maybe 15-20 years, we have been constantly keeping up to date our solutions with the payment regulations, things like a shift from LIBOR transition, which shook up the entire businesses, let's say 3 years ago, or GDPR, which Deepak mentioned, which again came maybe 4 or 5 years ago as a compliance or a regulatory thing, right? So what would really help banks and financial services and fintechs is leave the compliance and regulation aspects to somebody like Oracle, who are known to kind of keep pace with regulations and keep their solutions up to date, right? That's one aspect of it. When it comes to cloud security as well, right? Choose a partner who is very rigid when it comes to the security on the cloud, be it on data, how the data is managed, or be it the operations part of it, etc. And again, where there are, let's say, industry-specific cloud solutions. A case in point being Oracle's own cloud. There are options where you can opt for a PCI DSS compliant cloud environment for card-related transaction processing. So if you choose a partner who is taking care of most of your regulations, then I think as well as cloud security, it makes it that much more easier for banks or financial services, companies, insurance companies, everybody, that much more manageable to deal with regulations and deal with these security aspects. That's what I would say, Mansi.
Right. Thank you, Sunay. Now, earlier on, we did discuss, and Brett also touched upon this point of how a large number of banks are still sticking to the traditional methods of banking, right? So, Deepak, my question to you is, what are banks losing out on if they do not leverage tech solutions provided by partners?
Big time. So I'll key off of what Jaydeep said, pandemic, that is so front and center. Pandemic changed the way business is done. There were murmurs of digitization. Now it's a full-blown train that's ramming down everyone's throat. Nobody can afford another disruption just because people couldn't show up to work. The lockdown. And so you need digital colleagues, digital work, digital ways of delivering service. So how does that happen? Typically automation, right? Oh, we'll do RPA. Of course, we'll put in the cloud. That will drive down costs, provide consistent service, make it always available. That optimizes throughput, workflow throughput through a business process. But what about optimizing output? You're able to process many more customers, but are you able to give them better service? That takes to the next level of digitization, which is data-assisted decision making, where new AI/ML techniques like augmented intelligence, often built by artificial, and actually mine intelligence from data to fine-tune your business functions to optimize output. Here's something else that is very much overlooked. Let's say you want to transition from a brick and mortar facility to a digital presence. It opens up the whole world for you as a customer base, right? So as a brick and mortar, let's say you're getting 10 applications a day for processing credit requests at a bank. If you open up as a digital facility, you'll be getting 10,000 a day. You can't hire enough people to do that. You need intelligent machines to deliver consistent service at scale in cloud that Sunay was talking about, right? All these things. And last but not least, reg tech, right? How do you, and I'll build on what Sunay just said. You have the base, you have Oracle. It gives you all the rules and regulations coded as scripts to say, oh, alert, missed, or conformed, great. But there is a fundamental thing that AI/ML provides on top of that, which is called transparency. Because once every aspect of your business operation that is automated, provided by AI/ML, is transparent, not through opaque statistical models, you know precisely why an action was taken, why it was not taken, whether it's conforming, whether it's not conforming. Everyone's on board. And that, together with what Sunay identified, is a very powerful solution. And every bank dreads regulators. So all these things, and AI/ML technology in general is almost a must.
Right. Now, talking about cloud that you mentioned, how has the cloud accelerated the business possibilities for fintechs and ISVs, Deepak?
How has the cloud accelerated? The cloud has accelerated basically by making the fintechs behave as if they were large corporations, being able to afford scale. Or earlier, just imagine you're a small fintech, started out, got a bunch of servers in some data center, that's all you can afford, or you have your own small little lab, and it doesn't scale, open source, this thing is out of date, that thing is not working. Now in cloud, all that responsibility rests with Sunay. And at very affordable rates, I can scale. All the various products that I use are available to me, latest releases. There are people to assist me with that. Not just that. Sunay takes me up another level and says, I'm going to offer you further value. I'm going to offer you data, financial credit data that you didn't have access to make better decisions for your customers. I'm going to offer you modules, like Sanjay said, unbundled modules of Oracle banking platform, right? So that you can leverage those to build your own solution. I mean, it's a two-way street, right? You want this because you build the big infrastructure, the highways and the roads. Now you need the traffic on it. And so the traffic is provided by these innovative apps from customers. So in many ways, it's a tremendously symbiotic relationship.
Right. Yeah. My next question is to you, Mandar. How has been your experience of moving your UPI and core banking platform on Oracle Cloud infrastructure?
When we started out 12 years back, as I said, without robust compliance, we couldn't have got the small banks onto the national payment network. So we had to create a PCI DSS enabled cloud, private cloud, which was not available in the country at that time. So besides writing the payment software, we had to also work very hard in giving the infrastructure, which is now readily available with OCI. And before taking a decision to shift to any cloud for Sarvatra, which has got more than 20 million card holders in rural India, farmers, 1 crore farmers who are using the product, which are going all over across all bank networks. And the customers of the State Bank of India and HDFC and ICICI coming to the 5,000 ATMs and 10,000 micro ATMs, which are run by these small banks. It had to be an enterprise grade cloud that we can comfortably shift from our reliable cloud and yet allow us to expand at very fast speed, because the way UPI is growing, all other systems were growing at like 10-20% a year. UPI is growing at 20% a month for us. So 20 years back, the total transaction per second of entire banking ATM industry was at something 50 transactions per second. And we are benchmarking UPI currently for one large customer at close to 6,000 transactions per second. That's the level you're talking about, from 50 transactions across all banks in the country to one bank doing 6,000 to 7,000 transactions per second, and which is going to grow at 20% per month. So then how do you deal with such a giant leap of digital transaction, yet give all the reliable technologies and more use cases of UPI being churned out by NPCI on a daily basis? So to make this all happen, we needed a cloud which we know that we can trust, which has got all the compliances in place, and can offer more than just a simple cloud. And also a product which all the banks trust. Oracle is one product which all the banks have used and they trust also. So for a payment platform like Sarvatra, choosing OCI was what you can say the easiest decision for us, because it has all the components required. What a payment platform like us, which is running more than 50% of the transactions of banks in the country, require. So that's what I think Oracle OCI offers.
Wonderful. Thank you for sharing that, Mandar. And I would like to bring Jaideep you here now. How are you addressing the challenges around scalability, integration, and security? Because these are three challenges that none of us can really ignore, right? And these are to be addressed like immediately. So how are you addressing these?
I'll answer with the easiest piece. So like security is not a challenge at all because we believe in Oracle. So I think Sunay knows this well. So security wise, like it's not a challenge at all. So corporate trust Oracle when we say that this software is hosted on Oracle. So earlier the choice was with the corporates, like most of the corporates as we deal with marquee names of the country. So they were saying we want on our servers, but servers has their limitation when it comes to scalability, the implementation time, the infra cost, and the replacement cost. So again, so why not OCI? So I think this is answered very well. So we don't need to convince customer in terms of security aspect. And when it comes to integration, so integration is a key strength of ours. So like we are seamlessing integration. We have done with multiple of ERPs. We are ERP agnostic, but yes, Oracle is a preferred partner as well as choice. We have seamless integration with all the banks through APIs, host to host. So we are a tech company. So we are much advanced in terms of when it comes to the tech. We have to be advanced, like when we call it fintech as our name. So I think challenges lies with the banks in terms of readiness with the APIs. We have trade APIs. Like it's like you're talking about the only payment APIs. What about trade? Why LC has to be open to the paper? Why the communication goes to the mail, or a runner has to go to the bank to give the documents, and then again the information comes on mail. They have to update on their Excels. So I think this time, like Brett also PPT was mentioning billion, everything was a billion, but we didn't talk about even 5,000 corporates. So I think that corporate space is still in the stone age when it comes to integration piece, so wherein we pitch in. So that is what our space, that is the opportunity rather than a challenge, as I mentioned before. In terms of scalability, definitely Oracle Cloud is a preferred choice. Like it's a multi-location. You can manage all locations out here based out of an Oracle, as like in terms of the software can be installed through various geographies. You can manage multi-entities, like various of our entities are like their family offices is using. So you can manage 30, 40 entities on a single software itself on an OCI platform. So scalability is not a challenge at all in terms of number of transactions, in terms of number of entities also. So you can maintain the entire company tree irrespective of the complexities, irrespective of that the architecture what the company is following. We don't ask customers to change as per our format. So we tell them your format will be adoptable. So that is only possible when it is on the Oracle Cloud, because if I have to implement every software, customization has to be done on the client server, which is technically a little bit challenging, but yes, we have done both the ways. So we give offer to the client, but definitely Oracle Cloud is the next technology ahead that corporate has to move.
Right. So would it be right to say that your collaboration with Oracle is ensuring seamless implementation of digital transformation for financial institutions that you're working with?
Absolutely. So like Oracle bring trust. So that's a trust factor is definitely there. So I think, so I told you before, so like it's like, it's not it's not difficult to sell at all. So like when we say Oracle OCI, so the question is answered itself. So it's, we need not to carry another white paper for that. So that is how, and definitely Oracle has come up in partnership. They understand the need, and they understand the space that we cover. They understand this is like, this has to happen. So like this is the opportunity next that lies in the corporate space where this piece has to be integrated. So that is what's like, yeah.
Thank you for sharing that, Jaideep. That's wonderful. Now I will, I think I would like to ask Mandar also this. How is your strategic partnership with Oracle setting the stage for the next phase of growth for digital payments in India?
So when now we go to the large banks, most of them have great experience with Oracle in the past. They love Sarvatra product, which is one of the fastest and best and one of the most uptime awarded product. So a combination of Sarvatra with Oracle gives a perfect product for a very large bank, to immediately cater to their crazy scale of UPI and their problems of having continuous shutdowns because of their infrastructure not scaling. So that's one of the big winners together. And this whole, when you say Oracle Cloud, all the techies like us know it's a combination of Oracle and the Sun, the technology from Sun, which is like a huge, hugely integrated. So the kind of quality that we are able to give and kind of throughputs we are going to give and bring down the cost of the bank as they scale. Because as they scale, they'll have to watch the cost per transaction, and the cost has to be affordable to the smallest bank with the smallest number of customers to a very large bank. And that is the kind of thing that I'm seeing that Oracle partnership will be able to provide. And the scaling, it can go on forever. And we know that Oracle will be there.
Thank you, Mandar. And now finally, before we close this conversation, Sunay, I would like to ask you this. I would like to ask you, is this that what will bring the next wave of growth for the financial services industry?
Thanks, Mansi. Well, I think there are far too many things that are happening out there. I'll probably list out a few which I believe that are going to drive the next wave of growth for the financial services industry. So Deepak mentioned about AI, ML and the usage of it. I think the penetration of AI, ML into the financial services industry is just increasing by the day. We talked about how businesses or FS industry can scale up, right, by automation. Automation here, we are talking of having machines do most of the work, which today is being done, in a non-digital fashion, right? That's going to be one big push, which is going to have a massive impact across whichever product you're talking about, be it retail, be it corporate. We are already seeing a lot of this push in the, let's say, like Jaideep also mentioned, the trade finance transaction flows, which are back and forth between the bank and the corporate, which today are paper-based, are getting digitized and are getting automated, all thanks to AI ML. So that's one area where there's going to be a massive shift in the way the transactions are performed, right? The other, I would say, aspect which is going to drive this whole ecosystem play and fintechs and banks coming together is about the whole APIs coming into the picture. Today, there is a lack of standardization of APIs, which is going to get solved over time. That's where I see regulation coming in again as a positive way, perhaps, where APIs getting standardized across the industry for various types of transactions is going to again drive a massive growth for both fintechs as well as the banks. And I think over a period, banks will also realize what is their niche or what is their specialization. Are they good at acquiring customers, or they leave it for a fintech to acquire the customers and then they do the, let's say, the back-end processing of it, white labeling of their products. Maybe a fintech that is out there who is able to provide maybe a better credit card, right? Or whatever today are the problems with a credit card, which typically you and I face. If there is a fintech that's able to solve that, right? Maybe the bank can piggyback on that fintech and then offer their, let's say, credit cards the back, white labeled from the fintech. We have seen massive, let's say, innovation or disruption in the payment space, because that's where I would say if you consider the bank account as the part of, let's say, a banking relationship, payments are your arteries and veins to reach that bank account. So everybody wants a piece of that action. Everybody wants a piece of that customer's, a portion of the transaction. So that's where, again, reiterating that the ecosystem play driven by APIs is going to be, let's say, a lot more prevalent. From payments, if you go to lending, there are now alternate lenders who are out there who use, like Deepak also mentioned, alternate data to be able to make better credit decisions, right? So all of this, some of this is already in action in some of the markets, but these are going to, I would say, in the near term, going to be more exaggerated, more accentuated, and banks have to be really ready for it and find their niche, whether they are good at acquiring customers, whether they are good at, maybe allow white labeling of certain products, maybe they are good at, some other things, but that's what they need to find out and partner with the right fintech to be able to survive as well as grow their business. that's what I would kind of sum it up, Mansi.
Thank you, Sunay, for sharing those thoughts with us. And on that note, thank you so much, everyone, for being here and sharing such valuable insights with our audience today. Everyone who tuned in, thank you. And we hope you were able to pick up some great learnings from our sessions. And now I would like to once again invite Sanjay from Oracle. I would request you to share your thoughts and close the event.
Thank you, Mansi. On Oracle's behalf, I would like to thank all our speakers who took out time to be part of Thinkathon. Oracle understands the capabilities required to thrive in a digital world, and we are committed to strengthen the country's banking ecosystem with our expertise in technology, data, and digital transformation. We are powering banking innovation along with proven fintechs and ISV partners, addressing specific industry needs, shaping ambitious ideas, and turning them into success. We invite banks, fintechs, and ISVs to sign up for our co-innovation program and build the future of financial services with partnership. I would also like to take this opportunity to thank our partner, YourStory, and all my colleagues from Financial Services Business Unit, Architecture, Industry Strategy Group, Oracle for Startup Program teams, and many more teams which help put this program together. Once again, thank you so much, everyone, for your time and have a good day ahead. Thank you.